Hey everybody, welcome back to the Thinking Crypto channel, your home for cryptocurrency news and interviews. Big news day, we have a huge update around the Ripple lawsuit from the SEC and the timeline and what's happening. We have some things being pushed back. The folks at Fox Business, the investigative journalists, have uncovered and got some more details. So I want to share that with you. And Gary Gensler of the SEC is getting called out on Twitter by Ripple's general counsel. Gary tweeted some BS today, and he's getting called out, rightfully so. We also have Congressman Tom Emmer introducing a bill regarding central bank digital currencies, or the U.S. digital dollar. This is significant, and I'll be interviewing Congressman Tom Emmer next week. So I want to share that news with you. And then inflation hits 7%. This thing is getting out of hand. And you know what that means, guys? More capital is going to be flowing into assets, and a lot of it into cryptocurrencies. Jack Dorsey launches a Bitcoin legal fund, a defense fund, if you want to call it that. And there's quite a few other folks talking about crypto, like Mark Cuban and so forth. So we're going to break it all down. Before we get to it, please go ahead and hit the thumbs up button, leave a comment below, and hit the subscribe button if you're new here. It helps support the channel, and it doesn't cost you anything. Guys, I uploaded my interview with Danelle Dixon, who's the CEO of Stellar, and you don't want to miss that interview. Definitely check it out. Remember, she's one of the CEOs that testified before Maxine Waters and the rest of Congress in December. So certainly has some great thoughts and perspectives on what's happening in the crypto industry and regulations. Now, this video is brought to you by Algorand, which is building the future of finance. Algorand is one of the leading blockchain projects in the crypto industry. They're getting significant adoption and investments. As far as adoption, you have CBDCs, NFTs, and other types of tokenization being built on the Algorand blockchain. And investments, Borderless Capital launched a $500 million algo fund. Both Anthony Scaramucci and Michael Arrington's hedge funds have invested hundreds of millions of dollars into Algorand to build out the ecosystem. So if you would like to learn more about Algorand, please visit algorand.com. If we take a look at the market here, Bitcoin continues its upward movement. We're currently at $43,595, and we're seeing some green across the board. And if we look at the Bitcoin weekly chart here, we see that green candle we were looking at yesterday is getting stronger. But as I always tell you guys, we want to be cautiously optimistic, because these rallies need to prove themselves. This could easily swing the other way. We've seen this happen, right? Something could happen, black swan event, some negative news, whatever it is, and drive it downwards. So we're looking for the rally to prove itself, that Bitcoin has found its bottom. And we talked about that 40K support level being the version of the 30K support level that took place in the summer, right? Where Bitcoin bottomed out at 30K and then bounced upwards, obviously. Now we're having another pullback, and we're looking for 40K to be that support level. We work our way up to new all-time highs. And as I've been saying and been on the record, that this thing is not over. This bull market's not over. There's still a blow off top that we have not hit yet. And then there will be ultimately a alt season, probably one of the largest alt season ever, where altcoins are going to go crazy. And remember, I keep telling you guys this, the capital flows from Bitcoin into the altcoins. And many tribalist folks in the crypto market won't tell you that. But once you understand that, it gives you the opportunity to make money. Leave your emotions at the door. There's money to be made here. And remember what I told you guys in previous videos, and not financial or investment advice, great opportunity to swing trade as well. If you're like, you know what, I'm going to buy this crypto, leave my long-term holdings as is. I'm going to throw some money to swing trade. So if I bought Bitcoin at 40K or 42 and it goes up to 54,000 or whatever it is, I could sell it and make a nice quick profit. So that's how I personally make some money in the market as well, swing trading. And this, of course, swing trading over months and sometimes quarters. So it's not like a weekly thing. So I want to make sure I set that context, or give that context there. Now, here's what some analysts are saying. Crypto Wizard said, Bitcoin falling wedge continues to mature and it's getting sexier. A successful daily breakout of $44,000 will lead to $54,000 quickly. He said, gave you this on a plate 5 days ago, whilst others panic. A clear example of composure and clear-cut analysis. As I said, leave your emotions at the door, look at the data, look at the chart. So we see a breakout here, but I still want to let this rally prove itself before I get excited and say, hey, we're back on track, right? It's got to prove itself. Now, here's what Tech Dev, a big fan of Tech Dev's work. Here's what he said. Total altcoin market cap, still seeing similar structural setup and relationship to Bitcoin price action as compared to previous cycles, just stretched. So the lengthening cycles theory is playing out, right? Whether it goes to 6 months or a year or just 2 months, right? We don't know, but it's definitely lengthening because we didn't have our blow off top in December, as we saw in 2017 and even back in 2013. So things are still on track, guys. And remember, this is all facts. This is data. This is the trends. That does not mean it's going to play out the same way. When history often rhymes, it doesn't repeat exactly. So, that's why I share this information with you guys. So it's not my emotions or what I want or what you want, but rather, what is the data telling us? And here's another great chart that gives you an idea of where we're at and that we have not hit the bull off top. So the Bitcoin bull market volatility comparison from the Rational Root on Twitter. You see here in 2011, we went up to a blow off top. 2013, we went to a blow off top. 2017, we went to a blow off top. And these indicators of bottoms down here, and we see our respective bottom of where we bounce. And the context to this image or this chart is bounce. This cycle is not over, and this is the context that the chart that was provided. So we see our bounce here, and while the rate of returns, right, is not as great as they were historically, we still haven't seen that peak on the chart, on the line graph, right? So if this was the peak, it could go up to about right here, but still it would be a peak. It would mean, hey, we went to the blow off top. So this is why using the data, I'm just like, no, we haven't seen it yet, and there's still room to go. Now, here's what the Swiss bank CEO on CNBC said. Bitcoin will set a new all-time high this year. So very interesting. A lot of these macro investors are very bullish. I've shared thoughts from Raoul Pal, Dan Tapiero, both of who I've interviewed. So the outlook is still that we have ways to go. And a big catalyst, guys, and we've been talking about this for a long time, inflation. And remember what it did to Paul Tudor Jones. When he saw the money printing happening, he was like, I'm jumping into Bitcoin and crypto is the fastest horse in the race. And then the other billionaires started following his move, right? Well, guess what? They're going to jump in even further because this inflation is getting out of hand. So US inflation hits 7% in December, fastest pace since 1982. These big corporates and hedge funds and billionaires who are holding a lot of cash, they're about to go dump it into assets. So don't get me wrong, they're going to put it into maybe real estate and stocks, but a big part of it will be crypto. And it goes back to Paul Tudor Jones' thesis. It's the fastest horse in the race. So because it's emerging, because of the technical benefits and principles and attributes of crypto, given it's hard capped and it's global, right? It's not restricted to certain markets, gives it the ability to make significant returns higher than the stock market. And we've seen that, right, with crypto. And that volatility, you can use it to your advantage to swing trade and things like that. So these macroeconomic factors are going to drive more money into the market. Now, check this out. Here's another, speaking of performance of the crypto asset class, here's proof. Crypto funds outperform traditional hedge funds and digital asset benchmarks. Of course they did. I mean, you don't need to be a rocket scientist to notice if you were holding some level of crypto and you had some stocks, like I have some stocks in my traditional asset portfolio and I have crypto. Guess what? Crypto made me way more money than stocks. Of course, right? So in aggregate, hedge funds delivered returns in 2021 that lagged behind the broader market. Crypto funds held up better, according to data from HFR. A big rally in stocks over the course of 2021 did not translate into outsized returns at some of the world's largest hedge funds. but their crypto counterparts were able to produce returns that beat both stock and digital asset indexes. In aggregate, the hedge funds eked out a return of over 10% last year, underperforming the S&P 500 index's return of 26.9%, as well as the aggregate performance of hedge funds in 2020. The lagging results of hedge fund managers are tied to their underexposure of two big tech names like Apple and car maker Tesla, which clocked in eye-watering returns in 2021. Even top hedge funds like Ken Griffith's Citadel performed on par with the broader market. Citadel delivered a 26% for 2021, according to Bloomberg News. It's a different story for crypto funds. According to the data provided by Hedge Fund Research, the firm's crypto index suggests crypto hedge funds returned on average 214% in 2021. Aside from the 2017 boom cycle, that represents the best performance of for crypto hedge funds since the firm started tracking this particular subset in 2015. Guys, game theory will play out here. And look, we know capitalism and greed, you know, it's like Gordon Gekko said in Wall Street, greed is good, right? These guys who did not hit these same returns as the crypto hedge funds, trust me when I tell you, they're probably like, oh crap, okay, let's meet. Let's have our board meeting. What are we doing? Let's allocate some of our money to crypto, or let's double down on what we put in before. Trust me when I tell you, those conversations are happening. And it's just pretty clear what's happening, right? As far as validation of the market, and even like we've talked about, governments are on board, regulations are happening, and everybody around the globe is participating now. All right, let's talk about the Ripple lawsuit, the SEC Ripple lawsuit. And I'll play a clip here for you guys. So Eleanor Terrett of Fox Business, her and Charles Gasparino, obviously they're investigative journalists, been doing a lot of research and reporting on the SEC, what they've been doing with crypto, conflicts of interest with Ethereum, as well as the Ripple lawsuit. So Eleanor tweeted, the expert discovery deadline in the Ripple versus SEC case will be pushed back a month due to the rapid spread of the Omicron variant. A source close to the case tells Fox Business a letter outlining this new motion will be filed in court as early as tomorrow. Now, Charles Gasparino also said Ripple and the SEC are asking the judge to extend the deadline for taking witness testimony on XRP case from this week to February 28th, citing COVID outbreak. Also, Ripple believes judge this week could rule on its motion to get internal SEC documents regarding the commission's discussions of XRP. So, couple things. This crazy virus variant, they said they want to push it back, and that's because they want to do in-person depositions, which can last for hours. So I understand that, right? Given the spread and what's been going on, especially after the holidays. The other aspect, though, the judge could this week rule on SEC, hand over those documents you guys have been sitting on and have not been listening or following the instructions, right? They were supposed to give up a lot of that. So let's see what happens, guys. Maybe the end of this week or early next week, we'll hear about that. It'd be very interesting if Ripple gets their hands on this. You know, I don't know if we'll get some sort of public, information on that. Most likely not. But if this happens, this will be very important in this case. Now, Bank XRP pulled the news broadcast about this, and let me play a clip about regarding the pushback.
Now, this is interesting. Omicron has struck again. XRP has added more than 4% to its value over just the last 24 hours on news that proceedings in the Securities and Exchange Commission versus Ripple case will have to be pushed back now a month due to the spread of new COVID infections. to Charlie Gasparino with the latest breaking developments in the
We should
case.
point out this is
unbelievable.
This is a Fox Business report that moved that from Ellie Terrick, my producer, and I've been posting some stuff more recently. Our reporting has moved XRP. Here's what we know about this case. You know, we were just asking simple questions. Where is it? People thought, you know, early this year there would be some movement in the Ripple case versus the SEC. The SEC suing Ripple, the big technology company, over its XRP cryptocurrency, saying it's really a security that needs to be registered with the SEC. Ripple says no way. We're no different than Ethereum and Bitcoin. And this thing is going to be hashed out in court. It's probably the biggest crypto case out there. You know, it's going to set the stage for SEC enforcement going forward, how much authority they have versus the CFTC. So keep an eye on this. But we were just asking simple questions, Lizzie. You know, where the hell is it? It's, you know, okay, into January, where's the movement? We found out there was really no movement. And then we did a little digging. Here's what Ellie essentially came up with. Both the SEC and Ripple are asking the judge in this case, Judge Torres, a federal judge, to delay the case amid the COVID surge. They are having a hard time getting all the witnesses, and there's about 8 left of the 16 they want to depose, and they want them to depose them face to face. It's very hard to do this over Zoom because these things could last 7 hours. There's a 7-hour limit.
So I'm not going to play the whole thing for you guys, but just to give you an idea, you know, the reporting on this and the pushback, and, you know, something Charles said was that this case is so important for the crypto market. And I don't care if you hate Ripple or you hate XRP, you don't hold it, that's fine. But if you hold Cardano, you hold Chainlink or whatever else, HBAR, you want Ripple to win, guys, even if you hold Ethereum, because Gensler wants more power. And this guy is a hypocrite and he continues to tweet bullshit, like not understanding that, hey, people can see the full picture here. We have context. So while you can, you know, talk about all these things, oh, the SEC is here to protect you and this is what we're doing, but you want to address what William Hinman and Jay Clayton did and the conflicts of interest, and that with the lawsuit against Ripple hurt XRP holders, and you're trying to go after Terra Luna and you're trying to do other things, you're hurting these crypto investors, part of a decentralized network holding tokens, right? That is certainly not fair. And that's why John Deaton is representing the 60,000 plus XRP holders. So, you know, this guy is ridiculous. He said enforcement is one of the fundamental pillars in achieving the SEC mission. One pillar is the policy framework, the laws set by Congress and rules enacted by the commission. But you've got to examine against those laws and rules and enforce those rules. Now, I'm not going to read through everything he had to say, but Stuart Alderati, general counsel at Ripple, weighed in on this. You know, first, it's a 4-part tweet. He said, my first reaction reading this speech, and it's this meme of this guy, you know, just like raising his eyebrows, like, what? And here's what he said in addition to that. In all seriousness, the football field with no referee analogy Chair Gensler insists on using is wrong. The truth is the SEC uses regulation by enforcement to create an uneven playing field and picks winners and losers according to the opaque rules they make up as they go along. He says, his speech says, a high impact case pulls many other actors from the line. Does that sound like regulation by enforcement to anyone else? The SEC intends that the mere filing of a case chills behavior, regardless of whether they are right on the law or the facts. He says, because after all, that's why the SEC plays the delay card and uses it to their advantage. So much for justice delayed is justice denied. How about publicly committing to moving the Ripple case as swiftly as possible with no more delays? So we know Gensler, I've said it many times, you know, some people may think this is tongue in cheek, but it's not. This guy is bought. He's a Wall Street bankster, and he's a puppet being controlled by JP Morgan and Goldman Sachs. And, you know, there's been folks who looked at his calendar. He has not addressed the XRP holders and talked about certain things regarding crypto, but he's meeting with Jamie Dimon from JP Morgan and so forth. And we know that XRP is a direct competitor to the JPM coin, right? That was even outlined in the World Economic Forum's documents showing for intra and interbank payments. They had XRP, JPM coin, and so forth listed. So one could assume here that, like I said, he's putting up the roadblocks because his banking buddies want to grab as much as they can of this. They want to control it because crypto disrupts them. They lose a lot of power. I'm not saying that crypto kills them, but they lose a lot of the monopoly, the power they've had historically, and in manipulating currency, the markets, and so forth. But one thing we know for sure, guys, they can't stop it. They can put up all these roadblocks, but innovation, disruption, this technology will find a way. We've seen it historically. The people who are anti-internet, anti-automobile, anti-electricity, whatever it may be, technology, innovation always progresses. Now, Congressman Tom Emmer, who I will be interviewing next week, and I've interviewed him before as well. If you haven't seen that interview, I'll put a link in the description. Well, check this out, guys. He says, he tweeted, "Today, I introduced a bill prohibiting the Fed from issuing a central bank digital currency directly to individuals. Here's why it matters." He says, as other countries like China develop CBDCs that fundamentally omit the benefits and protections of cash, it is more important than ever to ensure the United States digital currency policy protects financial privacy, maintains the dollar's dominance, and cultivates innovation. CBDCs that fail to adhere to these three basic principles could enable an entity like the Federal Reserve to mobilize itself into a retail bank, collect personal identifiable information on users, and track their transactions indefinitely. Now, you guys know I've talked a lot with politicians and regulators about this, even Chris Giancarlo, crypto dad of the Digital Dollar Project. We've talked about this twice in an interview, and even with Congressman Tom Emmer, when I interviewed him, we talked about it. In the United States, we have the Constitution. So how do we find the balance where our privacy and our rights are protected? So I'm glad he's doing this. He's not anti-CBDC. He's saying they can launch it, right? But there have to be guardrails in place to protect the consumers and the citizens' privacy. He said, not only does this CBDC model raise single point of failure issues, leaving Americans' financial information vulnerable to attack, but it could be used as a surveillance tool that Americans should never be forced to tolerate from their own government. Requiring users to open an account at the Fed to access a United States CBDC could put the Fed on an insidious path akin to China's digital authoritarianism. Any CBDC implemented by the Fed must be open, permissionless, and private. This means that any digital dollar must be accessible to all, transact on a blockchain that is transparent to all, and maintain the privacy elements of cash. In order to maintain the dollar status as the world's reserve currency in a digital age, it is important that the United States lead with a posture that prioritizes innovation and does not aim to compete with the private sector. Now, this is important because yesterday, Fed Chair Jerome Powell said private stablecoins and CBDCs and the digital dollar could coexist. And I said that was incredibly bullish news, guys. They're not going to try to kill stablecoins. And he said back in Q4 that there's no plans to ban Bitcoin and crypto. So these are green lights. And it makes me very bullish for the future of this market. So Congressman Emmer ends here by saying, simply put, we must prioritize blockchain technology with American characteristics rather than mimic China's digital authoritarianism out of fear. This man's a hero. This is so significant, right? And I hope this gets passed and enacted, or at least, it sets the standard or the tone that somebody else's bill will also include these guardrails. But this man's a hero. And if you realize, what has happened historically with the NSA and the Patriot Act and so forth. Look, I believe in stopping terrorism and stopping bad people from doing things, but I don't believe in getting our rights trampled and losing them, right? There is a common ground, and that's why you have warrants. You want to go check up on somebody, get a warrant, right? And this Federal Reserve should not be tracking everything that we buy, if we get this CBDC and we're all using it. Look, I think it's coming. There's no way to avoid it, right? We're going to that token economy, that digital age, but we got to be careful because, look, man, absolute power corrupts. We've seen this, right? Human nature. Not to get off topic, but these things are important to keep in the back of your mind. It may seem like something simple, but it's not. And you gotta use your rights or you lose them, right? And you gotta fight for your freedoms. So I like this. And like I said, I'm going to be interviewing him next week. And if you have questions, leave them in the comment section. All right, let's move ahead. Jack Dorsey to launch a legal defense fund for Bitcoin developers. The initiative seeks to minimize legal headaches that discourage software developers from actively contributing to Bitcoin. Now, I don't care if you love or hate Bitcoin. This is significant and a move in the right direction because we need to lobby, we need to fight back, because look, you got people like Janet Yellen putting in the infrastructure bill these tax reporting rules, which cannot be enforced, which is a nightmare. They don't know what they're doing. And we need to protect the people building on Bitcoin as well as other crypto projects. This is one of those scenarios where we can't look at this coin versus this coin, but we have to look at the banner of crypto and come together. So Jack Dorsey, CEO of Block and ex-CEO of Twitter, has proposed creating a nonprofit organization that protects the rights and interests of open source Bitcoin developers who are often subject to litigation and threats. Dorsey explained in an email sent to the Bitcoin Dev mailing list on January 12th that the nonprofit's intention is to defend Bitcoin developers from these threats in an attempt to prevent contributors and maintainers from capitulating, often a reality as many lack legal support. Here's a quote: "The Bitcoin Legal Defense Fund is a nonprofit entity that aims to minimize legal headaches and discourage software developers from actively developing Bitcoin and related projects such as Lightning Network, Bitcoin privacy protocols, and the like," the email read. So great move in the right direction, guys. I like this. And I think I don't know if it was yesterday's video or the day before, I talked about DAOs, so decentralized autonomous organizations. And I said, look, if the SEC and some of these regulators don't get it right, the technology will evolve to a level where DAOs and so forth will be used to bypass them. And trust me, I don't think Gary Gensler wants that. But if Congress doesn't act soon and put Gensler in his place, people will move to that. And then the government's going to have problems on their hands. It's better they allow this thing to cultivate and be careful what they do here, because I've said it before, right? Just earlier in the video, disruption, technology will always win. It may take years. I'm not saying it's going to happen next month, but it will find a way. It will find a way. So this is a move in the right direction. I like this, guys. Now, check this out. Iran to allow crypto and Bitcoin payments for international trade. Now, I know there's politics. There's all kinds of stuff behind, some countries in the Middle East, like Iran, very controversial. I'm not here to support Iran either way. I'm just neutral reporting the news. But this is adoption, my friends. This is adoption. And remember, game theory. Watch neighboring countries in the Middle East follow suit. Just remember game theory. If you don't know what game theory is, go research it, please. Look at this. Arkansas, obviously a state in the United States, the Arkansas Council is offering $10,000 in Bitcoin to tech workers who relocate to the state. That's a pretty nice incentive. And in Bitcoin, they could just give cash. Why are they giving Bitcoin? Oh, man, guys, I'm so bullish on the future of this market. And, a lot of it comes down to patience. You're just seeing all these puzzle pieces coming together. So amazing. Now, Mark Cuban, who's a big investor in crypto, obviously NFTs and so forth, he shared something about crypto and how he looks at it. He says, "When I look at crypto, I look as an entrepreneur and ask, how do any combination of smart contracts, decentralization, security, and economics enable a better way to do business and create opportunity? If I see one, I start to invest in it." So he has like this whole thread going where he's talking about it. But I love sharing this with you guys because it's a different perspective and someone who's obviously super successful, right? And he's a tech entrepreneur, and obviously he's on Shark Tank, and he owns the Dallas Maverick, and he's bullish on crypto, guys, and he's all in. He's looking to build and invest. So we're seeing these whales, these successful people all jumping in. Finally, check this out. Coinbase held $139 billion in crypto for institutions in Q3 2021 versus $17 billion in Q3 2020, a 717% year-over-year increase. Coinbase, was a smart move on their part, building a custody solution and having the brand and the trust. And now a lot of institutions are custodying with them. So just look at that, guys. From 17 billion to 139 billion. A lot of these obviously are institutions. It's corporates, it's hedge funds and big investment firms. This is bullish, right? And this type of news gets me excited because I know while it may not make the major headlines on CNBC and Fox and so forth, these guys are buying and they're taking it to a well-known custodian. And these are the facts. That number is growing. So somebody's buying, somebody's investing. And this is not retail. This is not retail. This is institutions. And it's in the billions. And guess what? It's going to get into the trillions. We're still early in the adoption curve, guys. Anyway, let me know what you guys think about this news. Leave your thoughts and comments below. Hit the thumbs up button. Don't forget to check out the interview with Danelle Dixon of Stellar. I'll have the link in the description. And I'll talk to you all later.